Stocks tumbled as interest rates went up, and now a new trend, more seniors returning to the workforce to make ends meet. Joining us now is former White House economic advisor Steve Moore. Steve, always great to see you. We saw stocks go up a little bit Monday as traders tried to recover some ground following the worst week of the year on Wall Street. How much more do you think we're going to see stocks fall, and what does this inflation report mean for everyday Americans, do you think?
Hi, Jan. Good morning. Well, first of all, on that report about, economists predicting a recession in the second quarter, I remember most of the economists were predicting a recession in this quarter, and it didn't happen. And so, economists, I hate to say it of my fellow scholars, but they are oftentimes wrong in terms of predicting what's going to happen. The jobs picture still looks really positive, Jan. I mean, if you're looking for a job, they are still out there. But then you have these concerns, as you were talking about, the fact that the Fed has raised interest rates 8 or 9 times now, and I think a couple more interest rate hikes are probably in the cards right now. So that's, trying to, roll a boulder up a hill right now in terms of the effects of that. So, boy, it's hard to figure out where this economy is headed, but I'm going to tell you, I don't think a recession is necessarily baked in the cake. I think we could still get around it.
But we're seeing stocks right now not as high as we want them to see, right? We're seeing retirement accounts getting hammered. And there's this new trend right now where many seniors are forced to really go back into the workforce. Do you think this is going to change and shift the U.S. workforce?
Well, it's interesting because over the last 2 or 3 years, we've actually seen the opposite effect where seniors have, in terms of the labor force participation rate, has really fallen among people over the age of 60. In fact, a lot more Americans have taken early retirement, Jan, and maybe it's because of the pandemic and they just, were nearing the end of their work life and they decided to retire a little bit earlier. As you know, we're missing 4 or 5 million workers of working age that should be in the labor force that are not, that never came back after COVID. So if you're right, Jan, that some seniors may be getting back into the workforce, that might be a good thing because, boy, we need the workers. But you are right that the cost of living increase that we've seen because of the higher inflation is really hitting senior citizens the most. Although remember, Jan, one other thing, the seniors who are on Social Security got, I believe it was a 9% increase in their Social Security checks in January. That's a big boost.
But is that going to be keeping up with inflation as we continue throughout the year? That's the big question, right? Because we're all paying more. And we always talk about this soft landing. When we look at the economy, we look at these tumbling stocks, we look at inflation that's not cooling off as fast as the Feds want it to right now. Does this mean the Feds are not going to have the soft landing they were hoping for?
Look, I'm worried more about the kind of longer term implications. Jan, how many times have we talked about this on your show, of this massive increase in government debt? I just did a report that came out earlier this week in the New York Post showing that the debt the forecast for the next 10 years is $6 trillion higher in terms of the debt since Joe Biden came into office. We can't keep this up. We can't keep borrowing $2 trillion a year after year after year. We've got to bring this budget somewhere close to being back into balance, or else I think you could see a real financial crisis, perhaps as terrible as we saw remember what happened in 2008, where almost over the weekend, the economy went from rosy to in a state of destruction. I hope that doesn't happen, but come on, let's start getting our house in order and start paying our bills in Washington, Jan. Come on, you have to pay our bills, right?
And back in 2008, we also saw Lehman Brothers collapse as well. So there was a lot of different factors going on with the subprime mortgages, which hopefully we're not going to see that again. We know that the latest consumer and producer price reports were a bit hotter than expected. So was the Fed's claim that the disinflationary process has started premature?
It might well have been. I was as surprised as anybody about those latest reports that have come out in the last few weeks showing another uptick in inflation. And that, the reason that's so negative for the economy, not just because consumers are going to feel the pinch of that, obviously, but also, Jan, it means that there's a higher likelihood now of more interest rate hikes from the Fed. Exactly what we don't want to see. If you're trying to buy a house and you need a consumer loan, it means borrowing costs are going to rise.
Former White House economic advisor Steve Moore, always great to see you, my friend. Hope you have a great week.
Thanks, Jan.